Hey everyone, welcome back to Corporate Decoder, the place where we decode SEC filings to make you smarter about the market. And let's just say Presidio Property Trust has been busy making some interesting moves that we're going to unpack today. If you're tired of wading through corporate jargon and want to know what's really going on with companies you invest in or are curious about, then hit that subscribe button. And hey, while you're at it, join our Discord community linked in the video description. It's a great place to discuss these filings and share insights. So Presidio Property Trust, which we know as SQFT, has just put out a current report outlining a significant event, a securities purchase agreement that's going to bring in some much needed cash. Think of it like a company selling some of its chips to raise money for its next big move. The core of this filing is all about a deal struck on July 14th of this year, where they agreed to sell a bundle of their common stock and some special warrants to an institutional investor. This is what they call a registered direct offering, and the goal is to raise about $2.05 million before fees. That's a nice chunk of change for a company that's probably looking to expand or solidify its financial footing. Now, let's break down what they're actually selling. They are selling 140,000 shares of their Series A common stock. This is the regular stock that people can buy and sell on the market. They're also selling pre-funded warrants. Now, what's a warrant, you ask? Think of a warrant like a coupon that gives you the right but not the obligation to buy a company's stock at a specific price later on. These particular warrants are pre-funded, meaning they can be used right away and have a super low initial price, which is basically nothing, just a fraction of a cent. They expect to sell these shares and warrants together for $12.00 a piece. So you have the common stock, that's the basic ownership stake in the company, and then these warrants attached to it. It's like buying a product and getting a special discount coupon for it thrown in. The company is doing this to get cash now, and the investor gets a potential upside if the stock price goes up. To make this deal happen, they brought in a placement agent, AGP Alliance Global Partners. They're basically the middleman that helps connect the company with investors. They get paid a fee for their services, which in this case is 7% of the money raised. They also get reimbursed for legal fees and other expenses, capped at $75,000 plus another $25,000 in non-accountable expenses. So for every dollar raised, a good chunk goes to the agent and expenses. Capped at $75,000 plus another $25,000 in non-accountable expenses. So for every dollar raised, a good chunk goes to the agent and expenses. After all these fees and expenses are paid, Presidio Property Trust expects to pocket about $1.7 million. This money is earmarked for working capital, which is like the company's day-to-day operating cash, and for general corporate purposes. They even mention potentially acquiring additional properties, which signals an expansion strategy. But that's not all. In connection with this deal, they've also made some changes to existing warrants that were bought back in 2021. Specifically, they've reduced the price at which those older warrants can be exercised from $55 down to $12, and they've extended the deadline to use them from 2026 to 2030. This is a pretty significant adjustment. It lowers the barrier for investors holding those older warrants to convert them into actual stock, and it gives them more time to do so. It also means the company is likely expecting its stock price to reach at least that $12 mark for these warrants to be exercised. Now, here's a bit of a restriction. For 15 days after the deal closes, the company can't issue any new stock or announce any new stock-related plans without getting the okay from the placement agent and the investor. This is a pretty standard way to protect the value of the offering they just completed, making sure no immediate flooding of the market with new shares devalues what they've just sold. They also have to file a registration statement pretty quickly to allow the shares from those old, now modified warrants to be legally sold. Specifically, they need to file it within 30 days of the closing and have it go live within 60 days. This is all part of making sure the investors who get these shares can freely trade them in the market. Basically, item 1.01 of this report is confirming a material definitive agreement, meaning a significant contract has been signed, which is this securities purchase agreement. Then we have item 811, which is about other events. In this case, it's really just there to say that they also put out a press release on July 14th to announce this deal. It's a formality to make sure the public is informed. Now, the filing also lists a bunch of exhibits. These are the actual documents that support the report. We've got the form of the pre-funded warrant, the amendment to the old warrants, and the agreements with the placement agent. These are the nitty-gritty details of the deal, but for our purposes, understanding the intent and the financial impact is key. There are also legal opinions from law firms. These are essentially attestations that the shares and warrants being issued are legally valid and compliant with regulations. It adds a layer of confidence that everything is above board from a legal perspective. Finally, as mentioned, Exhibit 99.1 is the press release itself. It's the company's official communication to the public about this fundraising effort. Now let's think about what this all means. Presidio Property Trust is raising capital. This is a common move for companies, especially those looking to grow. The fact that they're using a registered direct offering means they've found a specific investor willing to buy a substantial chunk of shares. The term suggests they're confident in their future prospects, as evidenced by the reduced exercise price and extended deadline on existing warrants. They're essentially making it more attractive for these warrants to be converted into shares, which will bring in more capital if the stock performs well. The raise of $1.7 million after expenses is a positive signal. It means they have the resources to pursue their stated goals, like acquiring more properties. However, we need to remember that the placement agent and other expenses eat into that quite a bit. For every dollar raised, about 15% is going to fees and costs. It's not uncommon in these types of transactions, but it's something to be aware of. Looking at this from a broader perspective, is this a sign of strength or a sign of desperation? It's hard to say without more context on their current financials and market position. Raising capital is generally good, but how they use it is what really matters. If they can successfully acquire properties and increase revenue, this could be a very smart move. If those acquisitions don't pan out, then they've diluted their existing shareholders and incurred expenses for nothing. The modification of the 2021 warrants to a $12 exercise price is particularly interesting. It sets a benchmark. If the stock is trading below $12, these warrants are essentially worthless. If it's trading significantly above $12, then those warrant holders will likely exercise them. The extended timeline to 2030 gives them plenty of opportunity. So what's my take? Presidio Property Trust, SQFT, is taking a proactive step to secure funding for growth. The terms of the offering are fairly standard for this type of transaction. The key will be how effectively they deploy the newly raised capital. The potential for acquiring more properties could be a significant catalyst for growth, but it also carries inherent risks. Investors should be watching to see if these new acquisitions generate a positive return and if the company can manage its expansion effectively. The market will also be watching closely to see if the stock price can hold above that $12 mark to make those amended warrants attractive. It's a calculated move aimed at future growth, and as always, the execution will be everything. Alright, that's our breakdown of Presidio Property Trust's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.